So for decades, Japan has kept their interest rates near zero. What this means is that you can borrow in yen if you're a hedge fund or an institution, and you can borrow yen way more cheaply than you can borrow dollars, euros, or much of anything else. So traders realize something. They're like, well, why not borrow? Let's borrow $1 million or $1 billion, right? In a currency that costs nearly nothing. And then we're going to take that money and we're going to reinvest it in places with higher interest rates, maybe like the United States, right? So that's the carry trade. When we say carry trade, that's the carry trade in a nutshell. Borrow really cheaply in yen because their interest rate's really, really low. And then let's turn around and put it in the stock market. Let's turn around and put it in Bitcoin. Let's turn around and put it in, a 4% yielding interest rate country, right? So that's essentially the carry. The carry is like that profit that you get in between. Now, here's where it gets interesting, right? The Bank of Japan, if they raise interest rates, that's a huge problem. And it creates a huge problem for those involved in the carry trade because funding costs rise. So if you borrowed at near zero, like 0.25, 25 basis points or half a basis point, right? Or sorry, 50 basis points, now rates are 1% or higher. The cost of your trade just went up dramatically and your carry shrinks or starts to incrementally disappear. And so when that central bank, Bank of Japan, starts to raise rates, its currency starts to rise and it starts to unwind a lot of those people who were engaged in this carry trade operation. And oftentimes it's pretty violent. There's forced unwinds and liquidations because maybe people are underwater in their trade. Maybe they were expecting to get this carry trade for years into the future. Right now, I want to show you something. Here's the financial source interest rate tracker. And what do you notice? Well, if you scroll up, you'll notice the next expected move from the Fed, cut, next, hold for the European Central Bank, Bank of England, cut, everybody else, hold. Who's the only central bank that's looking to hike? If we click on them here, the Bank of Japan is the only one that's looking like they might hike. Well, what does that mean? And look where their current rate is. Their most likely move is upward 25 basis points to 0.75. They were at 0.50, right? And everybody else, like look at the Fed. The Fed's up near at 4%, right? So what's going to happen now to all of those traders and institutions that purchased or borrowed rather cheap yen at low, low interest rates? What's going to happen when they've thrown all that investment into something else that's more risky? Well, you're going to have to unwind their positions, and it might be a pretty wild unwind.